Tonight, something unusual is happening behind the scenes of the global metals market, and almost nobody is talking about it openly. A powerful Chinese billionaire has reportedly placed a massive $300 million bet against silver, and at the exact same time, political tension is rising in Washington as Donald Trump and his allies begin pushing policies that could completely disrupt China's control over precious metals supply chains. When billionaires start betting hundreds of millions against a metal that investors usually run toward during global uncertainty, it raises one massive question. What do they know that the rest of the world doesn't? Before we dive deeper, if you enjoy uncovering hidden financial stories and market power plays like this, make sure you like this video and subscribe to Market Truth Archives. This channel focuses on breaking down complex financial moves into simple stories you can actually understand. These are the kinds of details that rarely make mainstream headlines. Now let's get into what could become one of the most controversial silver market battles in years. Silver has always been a strange asset. It's not just a precious metal like gold. It also plays a critical role in technology, solar panels, electric vehicles, and military equipment. That means silver isn't just about jewelry or investment coins anymore. It's directly tied to the future of clean energy, national security, and global manufacturing. Over the last decade, demand for silver has slowly climbed as governments push toward renewable energy and advanced electronics. Many analysts believed silver was quietly setting up for a massive long-term price surge. That belief made recent developments even more shocking. That's why the recent move from a Chinese billionaire stunned market watchers. Reports circulating in financial circles suggest that this powerful investor has opened massive short positions, essentially betting that silver prices will fall significantly. A $300 million short position is not a casual investment decision. Moves of this size often reflect access to insider-level supply data, government policy expectations, or industrial demand forecasts. China already dominates large parts of the global metals supply chain. The country refines and processes huge amounts of rare earth materials and controls significant portions of industrial silver production. If a major Chinese figure is betting against silver, some analysts believe it could signal confidence that global silver supply might soon increase dramatically. That kind of increase could push prices sharply lower. Others believe the move could indicate China preparing to release large stockpiles into the market. Flooding the market with supply would force prices down quickly. This strategy has been used before in other commodity markets. If true, it would explain the scale of the bet. At the same time, political forces in the United States are moving in the opposite direction. Donald Trump and several economic advisors have been publicly discussing the need to reduce reliance on Chinese-controlled mineral supply chains. The argument is simple but powerful. If China controls the materials needed for clean energy, electronics, and defense systems, America risks becoming strategically dependent. Trump's proposed strategy involves increasing domestic mining and offering tax incentives to American mineral producers. It also includes potentially placing tariffs or restrictions on foreign metal imports. If these policies were implemented aggressively, they could reduce China's leverage over global silver supply. However, they could also disrupt international trade relationships. This is where the situation becomes incredibly complicated. If China expects America to boost domestic silver production, that could eventually create oversupply in the market. Oversupply would naturally push prices lower. A Chinese billionaire betting against silver could be positioning ahead of that shift. However, if American mining expansion struggles, the outcome could flip entirely. Environmental regulations, labor shortages, and infrastructure challenges could slow new production. If supply remains tight while demand grows, prices could surge. That scenario would turn the massive short position into a dangerous gamble. Another critical factor is the renewable energy boom. Solar panels rely heavily on silver due to its unmatched electrical conductivity. As countries race toward net zero carbon goals, solar installations are expanding rapidly. This expansion is happening across North America, Europe, and Asia. Simultaneously, some forecasts suggest solar demand alone could consume a growing percentage of global silver production. If that demand accelerates faster than mining output, silver prices could rise sharply. That outcome would directly contradict the billionaire's bet. It would also create supply stress across industries. There's also the issue of strategic stockpiling. Governments sometimes quietly accumulate essential materials to prepare for economic or military conflicts. If China has already secured large silver reserves through state-owned enterprises, It might feel comfortable betting against global prices. That security would allow it to ride out market volatility. Meanwhile, American policymakers worry about China's control over critical metals. During trade disputes, access to raw materials can become a silent weapon. By promoting domestic mining, Trump's camp aims to reduce that vulnerability. But building new mines is not a fast process. It can take years of environmental approvals, infrastructure, construction, and workforce training. Production does not begin overnight. That delay could leave the United States exposed in the short term. Timing becomes a crucial risk factor. Investors are deeply divided over what this all means. One camp believes the billionaires' move signals a coming price collapse. They point to supply expansion or a weakening industrial demand. The other camp sees it as a high-risk political chess move. If global tensions escalate, governments may aggressively stockpile metals. That behavior would drive prices higher, not lower. In that case, the short position could backfire badly. Political shocks have overturned market logic many times before. There is also suspicion that massive short positions influence market sentiment. When investors hear that a billionaire is betting against an asset, panic selling can begin. That selling pressure can push prices down temporarily. Major players may then profit from volatility rather than long-term trends. Retail investors are especially vulnerable during these moments. Many people view silver as a safe alternative during economic uncertainty. However, metals markets are heavily influenced by institutions and governments. Small investors rarely see the full picture. This lack of visibility leads to sudden price swings. Everyday traders can be caught completely off guard. Emotional reactions often replace strategic thinking. That's when losses typically occur. Currency competition adds another layer of complexity. Silver prices often move in response to inflation fears and the strength of the US dollar. When trust in fiat currencies weakens, metals usually rise. But if central banks stabilize inflation, demand can temporarily fade. Right now, global markets are filled with uncertainty. Energy transitions, geopolitical rivalries, and supply chain restructuring are colliding at once. This makes silver one of the most unpredictable commodities today. The $300 million bet reflects more than profit motives. It may represent a calculated prediction about how these trends will collide. Trump's push for domestic mining could be decisive. If successful, it could weaken China's dominance. If it fails, China's position may be reinforced. History shows commodity markets rarely move in straight lines. They swing between fear and scarcity. Silver has experienced explosive rallies, followed by brutal corrections many times. That's why this battle is being watched so closely. Both sides may be preparing for different timelines. The billionaire may be betting on short-term oversupply. Political leaders may be planning for long-term resource security. Those timelines could collide violently. At Market Truth Archives, stories like this reveal how markets really work. Financial systems are power struggles between governments, billionaires, and industries. Silver sits at the center of this battlefield. That makes it one of the most strategic commodities today. As the situation develops, one question remains unanswered. Is this bet a warning signal or a risky gamble? Even experienced analysts are divided. That uncertainty could define the next era of the silver market. If you found this story interesting, share your opinion in the comments. Do you think silver is heading for a crash or a surge? Your thoughts help deepen the discussion. Don't forget to share this with anyone following metals or global economics.